Okay, so let's go through the trade management answer. So how would you manage this trade? The rules of the trade is that our stop is going to be placed at the previous pivot low. Our break even is when the risk reward is 1-to-1. And our target is determined by trailing by pivot lows immediately after entry. So where are we going to place our stop? We want to place it at the previous pivot low. So if this is our entry bar right here, we want to check, going backwards, where is the first pivot low that we find. Now the red bar that I've just indicated there, is that low a pivot low? Let's take a closer look. On the right we have a higher low, and on the left we have a higher low. Therefore yes, this low here is a pivot low, and that is where we would place our stop. So what about our break even? Well, when we're looking for a 1-to-1 risk reward, we are simply looking at the distance between the entry and the stop, and we want the exact same distance going into profit in order for us to break even. So our stop will be moved to break even when the price reaches the place shown. So when price actually reaches right here, we will move our stop from this point right here and move it up to this point here. Now I just want to point out the logistics of actually doing that, how you actually move your stop. That's all going to be covered in the later modules. So don't worry about that. What we just need to understand right now is that we're doing that action. How we actually perform that action, it's a very simple step, and I'll cover that later on in the training. But it's the management that we're actually doing here. That's the important part. That's what you need to learn, and that's what you need to practice. So the target, where would we exit? Well, we need to trail by pivot lows. And this is immediately after entry. So what we want to do is we want to assess every single bar after entry and see whether it's a pivot low. And if it is, we need to move our stop to there. If that stop gets triggered by price after that, then that's where we exit. So looking at each bar, we are looking for a pivot low. What about the red bar I've just indicated? Is the low of that bar a pivot low? Let's take a closer look. On the right, I've got a higher low, and on the left, I've got a higher low. So yes, this is a pivot low, and that is where I will move my stop to. So once this green bar has completed, I will be able to see that the low of this red bar is a pivot low. So when this green bar has completed, I would move my stop from the break-even price, which is entry, because remember, price has already gone to our break-even point. So at the completion of the green bar indicated, I would move my stop from entry to under the pivot low. But we see that price doesn't come back down there, so we carry on trailing. So we look at the next bar, and we look at the next bar, until we find a pivot low. What about the green bar I just indicated? Is the low of that bar a pivot low? Let's take a closer look. So on the right, I've got a higher low, and on the left, I've got a higher low. So yes, the low of this green bar is a pivot low. So at the completion of this red bar right here, I would move my stop from the low of this red bar up to the low of this green bar. And what we see is that this red bar here breaks through that stop right at the point shown, and that is where we would exit our trade. So what's our risk reward here? So if we look at the amount of pips between the entry and the stop, it's approximately around about 34 pips from entry to stop. And from our entry to our exit, it's around about 127, 128 pips. So when we divide the reward by the risk, we get a risk reward of around about 3.75 to 1. Okay, so I hope you got all of that right. So if you go over to the next page, I'm going to be letting you in on something really exciting. This is Kumar, and I'll see you in the next video.